Mark Thompson, welcome. This is the first edition of Tin Time, which we're aiming to be a monthly series, educating the world about tin. I'm about to ask you to introduce yourself. I'm Simon Catt from Arlington and Cat Calls in collaboration with the miningnetwork.co.uk and the International Tin Association. Mark, can you tell us more importantly something about yourself, while you are Tin Tomo, the expert, as far as I believe, on tin?
Well, I'm certainly not the expert, but I'm probably one of many around the world. So my background really is as a metal derivatives trader for 20 odd years, and the last 15 years or so as an entrepreneur in the metals and mining space. I used to run all of the hedge books and proprietary trading in metals for Trafigura a long time ago, and was a hedge fund manager there. And I have significantly followed the tin market since about 2003, 2004. When the price was down around, $3,800 a ton. Current price is around $32,000 a ton, and have basically sat back for the last 20 odd years and watched a story evolve of a long-term lack of investment in new capacity and low-cost resources being exhausted, having to be replaced by higher-cost resources.
Right. And so what are the main forces that have shaped the tin market today? I mean, how far back do we have to go, Mark? Do we go back 100 years or 20 or 30 years? What's important in the history of tin?
Well, I would go back to 1945 and the end of the Second World War to set the scene for how we are where we are today. And you're coming into the Cold War period. You've got major realignments of powers across the world, with very few tin producing regions in the world. We're really talking at this point in time Southeast Asia, Russia, a little bit out of South America, a little bit out of the UK. Markets around 120,000 tons a year at this point. And of course, you're coming into not only Western powers competing with Soviet powers for resources and for influence around the world, but also the electronics age. And the main use of tin today, 51% of the market goes into electronic solder for joining together components on printed circuit boards. So it was very obvious to policymakers back then that tin was going to be a very strategically important metal going forward. One of the things that the US government did between 1947 and 1960 was build a very large tin stockpile for strategic war resources reasons, and also to a larger extent to try and deny resources to the Soviets. So over that 13-year period, they bought 360,000 tons of tin on global markets, so 3 years worth of global production in 13 years. And rather unsurprising, the tin price went up a long way until they stopped buying, and then the tin price came back down a long way, creating excessive volatility in the price, which wasn't good for any, particularly the consumers or the producers. So in 1961, there was an organization set up called the International Tin Council, which was a number of producer and consumer countries coming together to basically believe that they could long-term plan a tin price which would be fair for producers and good for consumers, and everyone would be happy. And they did that by setting a floor price. Below the floor price, something called the buffer stock manager would be financed to buy tin, and above a ceiling price, he would sell tin back into the market. And the idea was that this would keep tin in a stable price range. And it did actually work relatively well for nearly 20 years into the early 1980s. But as we came into the 1980s and we have the recessions of 81 to 83 across the West, and the fact that there were always more producer countries than there were consumer countries active in the International Tin Council, who kept voting to raise the floor price, we eventuated in a situation in 1985 where the International Tin Council ran out of money. They couldn't buy any more tin, and the whole system came crashing down, and the tin price fell 91% in real terms between 1985 and 1997, with massive stockpiles of tin. So what I hadn't mentioned so far was that the US had started selling their stockpile, which took them 45 years. And as the part of the collapse of the International Tin Council, you had about 200,000 tons of tin to be liquidated as well. So from 1985 onwards, tin was very much a pariah of the global international metals mining markets because the price was low. There was these stockpiles being liquidated. A lot of people lost a lot of money. and people just kept away from it. Fast forward to early 2000s, and you're coming towards the end of this 360,000 tons of stockpile being sold by the US government. You've had the 200,000 tons of ITC stockpile liquidated, and you've at this point had 20 years of next to no investment in new mining capacity and next to no investment in exploration. And as I mentioned earlier, the tin price was down around $3,800 a ton, and you kind of had this perfect storm then on top of it from the demand side, as regulators around the world were demanding the end of the use of lead in electronic solder for health reasons. So you were moving from tin lead solders, which were 60% tin, 40% lead, to modern solders, which are more like 95, 96, 97% tin, with a little bit of silver and copper and a couple of other things in there as well. So this was a very significant increase in demand. So the biggest single use for tin was seeing effectively a sort of a 60% increase in its demand in terms of how solder was constituted, alongside the fact that the stockpiles have been exhausted. There was no new mine capacities to come on stream. And we were also in the middle of the commodity boom of China's growth. And we saw some very, very significant price moves in tin. So ultimately on that cycle, we went up to $31,000 a ton, came back down to 10,000, and then we spent most of the sort of last 15 years up until pandemic times gyrating between about 12,000, 13,000 and $30,000 a ton, and we're right at the top end of that range now. So that's a short précis of how we've got to where we are today.
Thank you. And so most of the time, Mark, and I mean this is designed to be educational. Most people, when they think of tin, they think of tin cans. Is that important today compared to the past?
Well, it was in the past very important. So tin plate. So tin cans are actually made of steel, and you've got about a 75 micron coating of tin on the inside of the tin can, because it's got slight antibacterial properties, and it stops the tin rusting and reacting with the food inside the tin can. Today, tin can use, tin plate is down, I think, to something like, I'm going to say 10%, maybe 11% of the total tin market. It used to be closer to 20, 22%. It's, and we'll come on to this in a second, but it's one of the uses where there is a level of elasticity of demand, in terms of there are other packaging options available at a certain tin price. There are many other things that one uses tin for which are completely unsubstitutable. So I think one of the reasons we're seeing a drop in tin consumption in tin plate is because it's a reaction to the price environment we're currently in. And also beyond the price environment, rationing. There just simply isn't enough tin for all the people who would like to, or historically would have used it, plus demand growth going forward.
And so the big sources of demand that are growing today, I understand solar power is important. You mentioned electronics, which is about half of tin demand. Is there anything else?
So solar is very important. So we say electronic solder, 51%, from a mixture of solder for plumbing in copper pipes, but the vast majority being joining together components on a printed circuit board. And solar ribbon, which is a mixture of tin, silver, copper, has gone from 15 years ago being next to nothing. Today it's around 35,000 tons. This is out of an overall market of 360,000 tons. And that's a market that's shown 31% average compound growth over the last 15 years. It will come, that sort of level of growth will not be sustainable, but it looks like definitely in the short to medium term, you're going to continue to see demand growth for tin from the solar sector because it is unsubstitutable.
Gotcha. So we've got electronics, we've got solar power. Any other important sources of demand before we get onto supply?
Yeah, chemicals. So tin chemicals are stabilizers in plastics, largely unsubstitutable without completely re-engineering production lines. There are a few other chemicals that you could use, but they're generally speaking more expensive and less stable supply. Alloys. So, I mean, surprisingly less. It's only about 6% of the market goes into bronze. Again, it's one of the sectors where we have seen some substitution to lesser quality product because of rationing and the price having gone up so much. And then there's a bunch of small things, like tin capsules on the top of a wine bottle, float glass. So all flat glass is produced by floating molten glass or molten tin something called the Pilkington process. That's basically unsubstitutable, 100% unsubstitutable. So lots of little small bespoke things, but the biggies are really solder, chemicals, and tin plate.
Gotcha. Okay. And demand, as before we get on to supply, one more question. So demand's growing today, I understand, somewhere between 2 and 4% a year compound. Or is there some structural, because of its role as a energy transition metal, are there some structural demand accelerators? So overall demand, as well as cyclical demand, is growing faster than in the past.
A very good question, and a very complex answer, not one to easily give in a short period of time. Historically, if you say the world has grown at 2.5%, the tin market typically grows at 2% a year, with a 2 times leverage around 2.5%. So if the world grows at 4.5%, tin will grow at 6%. The world grows at 1.5%, tin will slightly contract. That will be very familiar to almost all metal consumption. We've had a dynamic in the solder industry over the last 20 years, which has been exponential demand growth as the sector has grown enormously, with most people having multiple personal devices, versus miniaturization effects, so using less tin on smaller components in circuit boards. And broadly speaking, those two things have offset each other. But there's a bit of an argument that we've come to the end of the miniaturization process in any realistic form, and we're seeing this again now in the percentage of the tin market going into solder. Effectively, that exponential demand growth for electronics is outweighing any miniaturization. Last year, and this is slightly confusing, and it's a technical commodities thing to understand. Last year, the market contracted by 3%. But at the same time, global above ground stocks went from 4.5 weeks to 3.8 weeks. So what it's basically saying is it contracted because we've hit the limit of drawdowns of stock. And we hit a point and a price point and an availability point where you've had, I would say, rationing. The market has rationed its use by substitution, and if the units just weren't available. So you look at the numbers and say, "Oh, the market shrank last year. I can't be bullish." Well, the reality is supply went down enormously because of production supply issues in Indonesia and Myanmar, and very, very significant production issues in terms of corruption and the shutting down of a number of operations in Indonesia, and the internal civil strife in Myanmar and all the mines there being closed. So what we're actually seeing is supply shrinking considerably more than demand is shrinking, and all of that has brought together. The tin price has gone up 30% over the last year. How we evolve going forward could be very interesting, because at some point I think we're going to see Myanmar come back on stream, which could be an extra 10, 20, 30, 40,000 tons coming to the market, depending on how that comes back on stream. But a lot of that will just go to fill up pipeline holes. But on the background of demand will still continue to grow. We're coming out of a period of soft demand in China because of the housing slowdown there. That will have its natural period and come out of it. So I'm particularly with the demand growth we continue to see from solar and from electronics. I would historically, if supply was available, be looking to see this market grow at 3.5% to 4% a year. I suspect we won't see supply grow at that rate, short of Myanmar coming back fully back on stream anytime soon.
Right, and Mark, I think I'm right in saying that the only significant new mine in the world have been Alpha Min's Monster Impama mine in the Congo, which is, I want to say, now producing about 15,000 tons a year, but nothing else really in the last decade or two has been a significant new source of demand of supply. Is that right?
Yeah, absolutely. And what an ore body, and one of the best, if not the best, tin ore body on the planet. Super high grade, lots and lots of tons. Been very profitable for Alpha Min to build that mine in a very, very difficult place in the world to operate. But as I come back to what I was saying earlier from the 1985 tin crash, we have seen almost no tin exploration going on for the last 40 years, and we've lost a lot of expertise in the geological community about where to go and look as well. So if you look at the pipeline of other assets, it's very, very, very sparse. As we can talk about Taronga, which we're co-invested in First Tin, but outside of that, even if I look at the most advanced assets out there, they all have issues. They're deep or expensive or troublesome metallurgy. There's a couple that will get built, I'm sure, but it's difficult to see anyone finding another Impama and bringing that on straight stream. It's difficult to see anybody putting the finance together to build a new tin mine outside of, as I say, Taronga right now. I just don't see where the money, the expertise. I certainly don't see any discoveries anytime soon.
Yeah, and Mark, just for the benefit of the audience, the Taronga Tin asset is owned by First Tin PLC, London-listed company, and actually, I think as recently as today, Metals X have come out, the Australian oldest and the largest Australian tin miner. Metals X, with about 200 million Aussie dollars cash on their balance sheet, have said that they are just increased their stake in First Tin to 29.9%. So I guess they agree with you in the International Tin Association that Taronga will be the world's next tin mine. By the way, while we're talking about new supply and companies that are on the move, I see also in the last 2 days what used to be known as Polymetals in Russia, Kazakhstan, now known as Solidcore Resources, since they divested their Russian gold assets, have actually just bought a new tin asset an old one in Kazakhstan called Sirimbet. Do you know anything about that?
Yeah, it's a very large deposit, and there's some high grade zones to it. So it's about 500,000 tons of contained tin. It's been around for many decades. It is a great example to me of why you need expertise in tin deposits before you go out and finance mines, and we really need a specific expertise on mineralogy and metallurgy. Sirimbet is very difficult metallurgically. The vast majority of the tin is held in grain sizes of less than 20 microns, which means it's going to be very expensive and very difficult to process to get any sort of high level of recovery from that ore. And if you compare that to, I mentioned Taronga again, where you've got an average grain size of, several hundred, if not several thousand microns, with visible cassiterite crystals hosted inside quartz veins, you've got maybe in excess of an order of magnitude of different processing costs for these two assets. So you've got to be very careful when you look at tin assets. Grade and tons are nowhere near as important as metallurgy and mineralogy compared to other metals. If I look at a gold deposit or a copper deposit, you're always looking at grade and tons because generally speaking, there's a way to process it. Tin is not the same. And you should also never, ever, 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 ever look at tin content. You need to look at cassiterite content, because cassiterite is the only economically valuable mineral of tin. So there's lots of other things out there that might have stannite or valamophite or malayite, and they have no commercial value. You've only got to look at the cassiterite content.
Interesting. So there's a couple of potential new mines, Solidcore, Sirimbet in Kazakhstan, and First Tin's Taronga in Australia. We've got the Congo asset of Impama and Alpha Min expanding now. If we look geographically, Mark, you mentioned Indonesia and Myanmar. So I believe Myanmar's supply is of the order of 30 or 40,000 tons a year. Is that currently producing at all?
Good question. I don't think it's very difficult to get in the country because of the ongoing civil unrest and the militias that operate in the Golden Triangle. This is one of the world's great drug-producing areas, and the tin revenue, though significant, probably pales into insignificance compared to the wars that are going on over access to the drug money in there. I don't think anybody really knows if there's much coming across the border, but the evidence seems to be, looking at import and export statistics out of China, because all of this tonnage goes to China, that there is very little going to China at the moment.
Right. Okay, so Myanmar's turned off. Indonesia's supply, I want to say that's down by about a half on recent historical levels of production. What's your view on?
Yeah, and coming back, so there's allegedly been, I'm going to use the word allegedly here, a massive fraud from PT Timar, which is the state-owned company, spanning many decades, and vast quantities of money, maybe some billions or tens of billions of dollars, has disappeared. And the Attorney General's instigated an investigation. A lot of people have been arrested. A lot of production and illegal production has been shut down. I would imagine over time it's all going to come back on stream under the umbrella of either international companies or more transparent companies, or PT Timar in a new form. So, the resources are there. It's mainly offshore dredging. The onshore dredging has created a bit of an economic, environmental nightmare, to put it mildly, on Bangka Island and Belitung Island. And it's very laudable of the Indonesian authorities to see them actually taking their responsibilities to transparency, financial conduct, and environmental concerns properly.
So you think that'll come back? So I think Indonesian tin production was about 80,000 tons a year. If you go back 3 or 4 years, and this year it's around 40,000 tons, or about 12% of the world. Do you think that will go back up to 80,000 tons a year?
Whether it goes back up to 80 or not, I don't know, because I think a lot of that production would have come from areas which won't be permitted going forward. But we'll see. I mean, it's a watching brief looking at that.
Okay. Anything else important on the supply side, Mark?
I like Heat. The only other one I really like is Heemskirk, which is near to Metals X, is Renison mine. I suspect with Metals X taking a 30% stake in First Tin that they're voting with their pocket on which one they're going to develop next. There's a couple of other ones out there, but nothing that I personally own as a stock.
Gotcha. All right. And do you typically buy futures contracts on tin or tin companies?
No, I tend to play from the equity side these days. I think you either trade derivatives full time, doing it part time is a license to get it wrong.
Gotcha. Okay, so we've spoken about demand, we've spoken about supply. Are there any interesting new uses of high technology uses of tin that we should talk about, just looking through the next little while? For example, just to throw something out there, batteries for EVs, which is quite popular for other metals.
Yeah, look, there's tin sodium on the battery side is looking interesting. But I think it's such a rapidly evolving landscape on where battery technology is going. Lithium prices have obviously come way, way, way back down from recent highs. Trying to predict where the world ends up on which battery technology is very difficult. I am a big fan of. I think I can see plenty of scenarios where sodium tin is a big winner, particularly for grid scale power storage of things like solar. But a lot of this is going to be constrained by various prices. There'll be battery decisions made basis availability and underlying prices of the commodities which are required to build these products. So it's potential demand until someone actually goes out there and builds a gigafactory to build a sodium tin battery at scale. I wouldn't factor that into my demand predictions going forward.
Okay. So maybe we could just head towards your thoughts on where the tin price is going, Mark. But before we get there, can you make a comment about inventories today? You mentioned these huge historical government stockpiles that have now been worked out. Can we look at where inventories have come from in the last 2 or 3 years and where that might inform where the price of tin's going in the next year or so?
Yeah, so as a general rule of thumb, it's almost impossible to run an industry with less than 3.5, 4 weeks of inventory, because you're really at the limit of just-in-time logistics. The numbers suggest we're around 3.8 weeks at the moment. I don't think it can go much lower. As I say, we came down probably by half a week, 3/4 of a week over the last 12 months. The price has gone up 30%. I suspect that when we hit a limit where industry can't operate with less working capital of tin, that we're going to see a significant increase in tin price again. So it's whether that happens before we see Myanmar and Indonesia ramp back up again, or any other development. So I've been quite surprised at how orderly the last 12 months has been. The tin price has gone up 30%, but in the face of some other significant headwinds. Obviously, we all know about the Chinese property market slowdown, uncertainty in the US coming into a US election cycle. It's been relatively well behaved, the tin price. We've been up to the mid 30s. We've been back down to the high 20s. We're back up today around 32,000. I do suspect that we need a price spike to get some interest going again in exploration, building more projects, putting tin back on the map, because it is so unsubstitutable for what you use it for. And I think, as I said earlier, where you can substitute it, things like tin plate, as in you go to completely different packaging systems, that is largely happening right now, and there is a limit to how far that can go before you can't continue to destroy demand from a particular use case. So my central forecast is we are going to see a spike at some point when inventories can't go any lower, and people who have to consume it continue to consume it.
And Mark, I'm reflecting back to the pandemic when tin prices were $50,000 a ton versus, as you said, $32,000 a ton now. Do you think we go back to that to make new highs like other metals like gold recently, for example? And if so, when?
So I think in terms of tailwinds for the price, things like the gold price is important because the gold price is going to drive investment rotation into commodities, which we still really haven't seen on this cycle. Yes, we've seen money come into the uranium market because it's been a fantastic story. Yes, we've seen money come into the gold market because it's sovereigns buying huge volumes to de-dollarize their foreign exchange reserves. There comes a point where it goes a bit more mainstream, and I think those commodities in shortest supply will probably be the ones which benefit most from that. So I could see, if a few $100 million out of a few tens of billions of dollars decided to find its way into the tin market, it's very difficult to see how you deploy that capital efficiently without a very significant price spike. So I think that's quite likely. I think the Western world debt issue is looking at kind of global currency devaluation and move to hard assets, 1970s style inflation. These things are all on the cut. I'm not saying this is definitely happening, but these are non-zero probabilities with significant outcomes to the price if they eventuate. So I think a better way to put it is I see very, very little long-term downside price potential because I can't see enough projects being viable below 30,000 that there can be a supply response to increase demand in the long term. And I would strongly argue that we need 50, 60, $70,000 a ton for 2 or 3 years before the banks are going to lend to every project to build the new mine capacity that we're going to require, and to encourage enough exploration that the market will balance in the long term. If you take the scenario on copper, I think it's widely accepted now that it's about 20 years from discovery to first production on copper. I think tin's probably going to be slightly less than that, considerably less than that, because it's less developed economies where likely future supply might come from, across Africa mainly. You've got to start spending now, or we are basically out, because the existing mines will come to an end eventually, and if you haven't got a pipeline behind it, and the quality of some of these existing mines has been so high, and it may well be the fact that there is nothing of that quality to find to replace them, and we're going to need multiples of much lower quality mines to replace that supply. And in that scenario, you're going to need very, very much higher. So, tin becomes a precious metal at those points.
But Mark, just to play devil's advocate briefly there, I mean, I think what you just said was because tin is a much smaller market than copper, like, for example, silver is compared to gold, when you see demand coming into the metals, it causes a bigger price action in the smaller metals. Tin is smaller than copper, silver is smaller than gold, so you get this exaggerated price action. Against that, what you just also told me was that Indonesian supply and Myanmar supply was going to go up. Is that in the next year or two at least as important as that potential demand effect on price?
That's a very good question. I think we've seen so much destocking that people are going to be uncomfortable at these stock levels, and there is a natural restocking required. We had a balanced market when Myanmar and Indonesia were, we had a balanced market at $25,000 a ton when Indonesia and Myanmar were going at the rates they were going 3 years ago. So even if they come back on stream, we go back to where we were 3 years ago with an Impama South on top of it. But, if we're for 360,000 ton market, heading to 500,000 tons by 2035, 2040, something along that level of trajectory, you need an Impama every year basically to get there. And that's simply, the probability of that is zero. That is simply not going to happen. So longer term, I can't see a structural downturn in prices. We're at 32,000 and we're still not seeing projects get built, and we're still not seeing money coming into exploration.
Yeah. Well, it sounds, and I'm reflecting on something I read in the International Tin Association's recent monthly, that looking into 25, supply and demand are actually quite finely balanced. you've got quite a lot of variation in both. Looking into next year, we've spoken about there's different sources of supply and demand. If there is an AI restocking cycle, we all need more gadgets. Well, we're going to need more tin to do that. So maybe the semiconductor industry is a pathfinder for where tin demand goes.
Well, I'm going to make the point. I think the market is going to remain exactly balanced next year and the year after and the year after and going forward. The reason being is you cannot have a surplus or a deficit if there's no inventory change. And if inventories can't go down any further, then by definition, you have a balanced market. There is no deficit. The question is, or the smarter question is, at what price does the market balance where you've got largely inelastic demand versus constrained supply? And that's the interesting question is, at what point does the market balance where you destroy enough demand? And it's a fascinating question, and I have no answer to that at the moment, but I suspect it is much higher than current prices.
Maybe the subject of a future discussion, Mark. Thank you very much for your time today. Really interesting. Looking forward to seeing you out there in the tin world. Thank you very much.
Thanks, Simon. Nice talking to you.